Hi there, welcome to Kneppy Invest and welcome to the 11th of July 2025. Time is currently 3:21 p.m. So we have about 50 minutes left of trading, not only today, but this week. Now, before we have a look at the agenda, don't forget, or if you don't know by now, I will not be releasing an ASX daily rundown video on Monday. I'll be away for just a few days, but I do intend to release ASX Daily Rundown video on Tuesday. It might be a little bit late, depending on timing. It may not be, but I do intend to get back to where I am recording my videos, my little studio here, if you can call it that, hopefully by about 4 to 5 p.m. on Tuesday. So it might be slightly later than usual, but I do intend to release that unless something goes really wrong. And I do intend also to release another video on Monday. I don't know what that video is going to be just yet. I did just finish recording a video, a reaction to CMC Markets 18 investing strategies that all investors should know about. I'm not sure if I'll release that on Monday or leave that to September. I was going to say end or October, but it's either September or October. Okay, now the agenda for today's video. We'll go through the ASX today, have a look at the best and worst performing sectors, indices, also companies. Then we'll turn our attention to the top 5 stocks of the day. I have changed this. I had a different 5 companies, but I did change number 4 and number 5. I put one of those companies into the top gainers list, and the other company has been vacated completely. In fact, I won't even talk about that company. And then after the top 5 stocks, we'll have a look at the chart of the day. And the chart of the day has been inspired by one of your comments. Okay, now on to the ASX today. And we'll say right now, as I speak, relatively flat. In fact, the XJO, it's got red there, but red is down, but it says positive. There we go. So we'll say relatively flat in regards to the XJO or ordinaries, small caps and tech slightly down, resources up. I'm making a fairly, maybe not wild assumption, but I'm assuming that we have been saved today by iron ore. So BHP, Fortescue, Rio Tinto, I would not be surprised if those 3 companies are up a fair bit. The reason I say that is because I saw an article in Capital Brief that iron ore had a good day and iron ore companies had a good day as well. So let's have a look. Yeah, iron ore's had a pretty good last 24 hours or so, up 2.84% yesterday, up again today. So we might have been saved by iron ore. Other than that, I have no idea what other sectors have had a good day. So let's have a look at the best and worst performing sectors. And in fact, only one sector in the green. There you go. Materials up 2.1%. Now, I do know there was and you actually see the article here. In fact, Iluka and Lynas are in my top 5 stocks of the day. I do know that Iluka, Lynas, Rare Earths have had a pretty good day. So they are part of the mining sector. So iron ore, Iluka, Lynas, a pretty good day. Gold's not had a good day. Yep, gold's down. So really, I have a feeling those mining companies have saved the day for the ASX because all the other sectors are down. Now, some of these sectors are down by not all that much, like staples, but more defensive. And a pretty bad day for discretionary, IT, and real estate, all down by more than 0.85%. ASX 20 up 0.13%. I'm going to say something. So sometimes I will guess how many companies up and down. And even though it is up 0.13%, I am going to take a swing that 7 companies are up and 13 are down. Oh, close. In fact, it's even worse. 6 up, 14 down. You might be saying and thinking, how is that happening? The ASX 20 is actually up, but 6 companies are only up. Well, there's 2 ways that can happen. The 6 companies that are up are the biggest companies. So the bigger company is, the more likely it's going to have more of influence on the on the indice. And if those 6 companies are up fairly big, so I do have a feeling that those 3 iron ore companies have had a pretty good day, maybe up 3%, maybe Fortescue is up 5%. So I wouldn't be surprised if we've had a really good day for a few companies on the ASX, and the companies that have dropped haven't dropped nearly as much in percentage terms as some of the companies have risen. So I didn't really think 6. I was thinking 7 was being a little bit too, I wouldn't say bullish, but anyway, Let's have a look. We'll list these companies by market cap. There we go. Yeah, BHP's up 3%, which probably means I was shocked if Fortescue isn't up by more than 4%. You can just see here, BHP up 3%. In fact, let's have a look at percentage changes. So on the negative side, Macquarie Group, Goodman, Transurban, QBE, Aristocrat, all down by more than 1%. So quite a few companies have had a bad day, relatively speaking. But on the plus side, oh, Fortescue's only up 3.12%. It's really interesting. So Fortescue and Rio Tinto are much more iron ore focused. BHP is getting away from it. In fact, BHP are trending more towards copper. So there's a chance that copper might have had a really good day as well. Let's have a look. No, not really. That had that big spurt with 50% copper tariffs, but chart looks okay, but not as good as iron ore. So even though BHP management wants the market to think they are no longer an iron ore company, they're a copper company, it's not exactly working. And apart from those three companies, yes, Sigma Healthcare only up 0.7% and ANZ up 0.43%. And I suppose NAB is up 0.05%. So yeah, you can just see how just a few companies have really driven our market today. In fact, you could say, and I'm going to say it, iron ore has saved our bacon today. Well, maybe not completely, but that's the reason why we've had an okay day. Okay, now on to the top gainers. And I'm going to go back to what I was originally going to do and not really focus on this, just look at one company. Now, Falcon Metals is in my top five. And Loxley and Sunrise Energy Metals, they could be up a fair bit, not because they released anything today, but because the same reason Iluka and Lynas are up. Maybe, I don't know. I don't know much about those two companies. And in any case, I don't think they released anything today. And one of the top gainers is a company called HITIQ. HITIQ. The only thing I know about this company is they have something to do with concussion. Now, fairly low turnover. So I probably should look at the turnover first, but they did release something today. Share price up 23.1%. You can see Iluka up 21.86%. And John's Lyng Group is in my top five. So I'll just go through this fairly quickly just to see if there's anything else. I did go through this. Oh, come on. Sometimes it does this. There we go. I did go through this earlier. I just want to see if it's changed. No, nothing's changed. So let's have a look at this company called HITIQ. Something to do with concussion, technology or something. They did release HITIQ enters UK consumer market with Protecti launch. And I'm not sure what exactly this is, but it's concussion management system. Not sure exactly what that is. Is it mouth guards? Because they do sell mouth guards, I'm pretty sure. Here we go. Mouth guards. Somewhere down here, somewhere. Yeah, so HITIQ pioneers concussion management technology delivering smart mouth guards. I'm not sure how mouth guards can be smart unless they got a chip in it. And software for sports, clinical, and research applications globally. Its ProTech system enhances athlete safety across elite and community sports. And there's something about Shock Doctor, whatever that is. Anyway, so they're moving into the UK consumer market. They also talk about TAM here. I'm not the biggest fan of when someone mentions TAM because what is a realistic TAM? They do say 2.02 million participants across rugby union, rugby league, the main collision sports with hockey and combat sports, also representing substantial participation levels. So I suppose that is TAM, but what's a realistic TAM? How many of these participants will, want this product? It could be 1%. And you could say, well, even 1% is 2,000. 20,000, sorry, 20,000. So maybe that's enough. Maybe that's all they need. Let's have a look at the chart. Oh, actually, before we have a look at the chart, so this company does release Appendix 4Cs, I'm assuming. And I'll also say, I haven't really looked at this company in depth. They do talk about Shock Doctor. Is that the mouth guard? I don't know. Manufacturing agreement. Let's have a look at the most recent Appendix 4C. They do release a lot of announcements, by the way. Let's just see how much receipts and revenue this company has. And not a lot. $21,000 receipts in the last quarter, $553,000 in 9 months to date. So they're well away from even approaching an inflection point. burning through a fair bit of cash, take away the government grants and tax incentives, burning through $1.8 million of cash. Well, in fact, I'd say 1.5 million per quarter. Okay, so let's have a look at the chart for HIQ, high tick or something like that. And nah, not familiar. Although, it's at the previous lows back in September. Share price has gone from 5 cents down to 1.6 cents. Maybe, I don't know. Not for me though. And that's the top gainer of the day. One of the top gainers of the day. Top losers, nothing much here. So a lot of companies had a good day yesterday, like Imogen Biosystems. Yep, had a good day yesterday, down a fair bit today. Codify is just going up and down like a yo-yo. A few really bad days. They had a really good day. Now another bad day. Look at that. Look at that 5-day, 6-day period. Actually, we'll say 7-day period, including the day down. Actually, it goes even further back. This, if I was a day trader, I'd be loving this company. We're talking about share price either increasing or decreasing by double digits for the majority of days. But the bad days have been pretty bad lately after some pretty good days. So I do know someone mentioned this company. They did buy a position, but not for me. Just too much volatility. Other than that, and I've already gone against my my what do you call it? The my agenda by talking about another company that I'm not supposed to be talking about. So the company I was going to discuss was Vulcan Energy, down 13%, because there's nothing else really here I really want to discuss. Like Ora Banda is down 10.7%, but that is the stock of the day, by the way. But Vulcan Energy is down 30% on what do you call it? Capital raising, which I don't usually mention all that often. Completion of 30 million euro, 53.6 million strategic placement. There you go. And this would have been done at a pretty big discount. We'll say 15% discount. Let's have a look. So just based off the share price, I'd say the capital raising is between 330 and 350. 350 would be bad. And capital raising done at 340. There you go. So you can sort of understand why it's 348. Share price down 13%. Anyway, so a fairly big placement for this company. Chart, I think, for Vulcan is not looking crash hot. Oh yeah, the chart does not look crash hot. In fact, the share price is at a really, although the share price is at a really important level. In fact, I'd say this is support level right now. Oh, looking interesting for Vulcan. All right, so that is the top loser of the day, or one of the top losers of the day. And now let's turn attention to the top 5 stocks of the day, starting with the company that is something to do with food. This company used to be called Jet Energy. Then they changed the name to Jatcorp. They sell foods. They released a business update. Go Jatcorp. I did not see this until I came back to my computer to start recording. Saw they released a business update, and I was just thankful that I went through all the announcements after 10 a.m. because I didn't find much to really talk about. Business update for Jatcorp. I'm pretty sure they sell food or manufacture food. This company at the forefront of innovative technology servicing the world's largest retail markets. There you go. Leading producer of supplementary food and plant-based products. Okay, that's what I thought. That first bit had nothing to do with what I thought. Forefront of innovative technology, servicing the world's largest retail markets. And then they're talking about producer of food, and that's nothing to do with tech. Maybe that's why I'm not a big fan of this company. There's another reason I'm not a big fan of this company, and that's because they do release Appendix 4Cs. And I find this company it must have really low margins. It's tiny margins because they do receive a fair bit of receipts. So the 9 months to date, they've received $24.9 million of receipts and are barely cash flow positive. So fairly low margins for this company, which is sort of understandable when you're a food manufacturer. So I have no interest in Jatcorp, but I am interested in business updates. Revenue contraction. Oh, that's not a good start. Advises that following an initial review of its draft management accounts, it expects a loss between 7.6 and 8 million. This represents a further 1.5 to 1.9 million of net loss in the second half, compared with 6.1 loss in the first half, and a material decline in financial performance compared to the company's financial year 24 audit results. Revenue contraction, total revenue declined by approximately 39 million, primarily due to the cessation of company's international trading operations. Okay. And the unexpected suspension, by the way, I have not gone through this. First time I've gone through this. And the unexpected suspension of sales of Nurio branded products in China. Not looking good. Impairment of Sanya goodwill, inventory write-downs. Oh, this is looking bad. High legal and professional expenses. Eek. Preliminary outlook for financial year 26. How can they be positive? Remains focused on the execution of a strategic growth agenda and is cautiously optimistic. Yes, okay. I doubt they do have any sort of targets. Oh, they do have a target. And has reaffirmed its commitment to achieving the contracted sales target of 11 million for financial year 26. Oh, that's a different brand. Oh, that's another brand. Okay, so let's have a little chart for this one. I can't tell you what exactly they manufacture. I wonder if they have a presentation or something. Do I really care? Nah, I don't care. Let's have a little chart for this one, Jat. Yeah, they used to be called Jat Energy, and then they changed the name because I'm not sure what they did. Maybe they were a mining company, and you do see a lot of mining exploring companies eventually not delist, but they do a reverse takeover from a mining exploring company into something else, and then you usually see a name change. Yeah, let's go back in time. Let's go way, way back. Keep going, click on here. Let's have a look. Go to 29th of January 2018. Yeah, Jet Energy. So they were Jet Energy at this point. And it looks like they were into food at this point because they're talking about milk powder. And I wonder if they've gone away from that. Talking about golden koala. So there is a chance that this company just keeps on moving different directions. Their business model just keeps on changing. But I wonder if they were a mining exploring company. Let's go way back. Oh, what we'd have to do is that. No, I did that. What you can do sometimes is just click the double arrow and it goes all the way back to the first announcement. I've lost all the announcements. Oh, there we are. So they came into being in 2008 called Jat Oil. I think we know what they were. So they probably changed their name from Jat Oil to Jat Energy because oil wasn't doing anything good for them. Renewable energy company. That's what they started off as, a renewable energy company, biofuel feedstock in 2008. Probably pretty proud timing too. Early 2008, at the beginning of the GFC. Okay, I've spent way too much time on Jatcorp and did not have a look at the chart. This chart is horrendous. Share price is in a downtrend, long-term lows. If you have a look at the weekly chart, you'll see that this is, oh, even worse. There's a lot of excitement in this company back in 2018. That probably is when they made acquisitions or something. Ugly, 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 ugly. Okay, so let's move on. I spent way too much time on Jat, something or other, Jatcorp. Let's move on to the company coming in number 4, Falcon Metals. Share price up 89.47%. This maybe should be up a little bit higher, but this is an exploring company. But what caught my eye, I did not know the share price was going to be up this much. First wedge hole at Blue Moon hits 1.2 meters at 543 grams per ton. Wowzers. Now, the 1.2 meter is fairly shallow, not shallow, fairly narrow. If this was 12 meters at 543 grams, I would have been, whoa. If it was 120 meters at 543 grams, this probably would be the greatest hit in the history of mankind. So it's all relative. But 1.2 meters at 543, I wonder if they have. That's all I saw. I didn't actually open up this announcement. That's all I needed. And I was hoping they had a longer depth of strikes, like 12 meters at 50 grams per ton. But in fact, they narrowed it down. Look at that. There's a 50-cent piece and, oh, okay, that's nice. Let's have a look. So intervals, that's what it's called, intervals. So they're 1.2 meters in an interval. And I'm not seeing anything else here. So all the intervals are fairly short. Anyway, so it's just that 1.2 meters at 543 grams. That was like, whoa, 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 whoa. Anyway, so let's have a little chart for Falcon. Can't remember if I've ever talked about this company in the past. I don't think so. And oh, a recent listing. So they listed in 2022, and they did have a nice day on the 20. Oh no, that's the weekly chart. Sorry. So they did have a nice day back in May 2024, and that's a nice little period. Didn't last very long. Share price has really popped up, and it's interesting that the share price has popped up to the highs we saw back then, and also the highs we saw back in 2023. So this is a resistance zone. In fact, sometimes when I see these sort of charts, all I do is put a box, this sort of box, and that's a resistance zone, a fairly long resistance zone, maybe 10 cents, between about 43 cents and 32 cents. So right now the share price is in that zone. And the reason I would say that's resistance zone is you would have shareholders of this company who bought in these zones, who saw the share price drop significantly, even below that zone, who saw the share price drop significantly. They see the share price rise today and go, oh, I can sell out this dog stock. Now, this company might be a dog stock, but the only reason they consider a dog stock is because the share price fell from when they bought. That's the only reason. And that's why we have seen a little bit of pressure on the share price. Not a lot, but there has been a little bit of pressure on the share price because we have seen a little bit more selling coming in today. Now, before today, the chart actually looked pretty good, showing signs of a nice little breakout. Loose lips? Maybe not. Okay, coming in at number 3, we have two companies. Iluka, share price up 22.2%, and Lynas. In fact, Lynas was on my trading list. It's up 16.6%. I won't buy it on this little increase in share price. You notice neither company released anything today. I didn't really read any news. And then I went back to my emails and I saw in probably Market Index that the Department of Defense, US Department of Defense, had invested in MP materials. Yeah, Department of Defense will commit to MP materials receiving a minimum price of $110 per kilogram for its neodymium and praseodymium output. Actually, in fact, it's in the news bit. So rare earths miners Lynas and Iluka surged in early trading after US rival MP Materials announced a $400 million deal with the US Department of Defense to expand the company's rare earths processing and magnet production. In a way, I don't understand why the share price of these two companies are rallying because this is a rival. And yeah, I think it's just positive sentiment that's been driving the share price of these two companies up. And I wouldn't really trade based off this. It may not be beneficial for either company in the long run. But the chart for Lynas was looking interesting just before today because the share price had dipped. And I thought, oh, I think the dip has come to an end. You can see the share price had rallied 3 days in a row. And yeah, and the share price has got to a new long-term high. So actually the chart looks okay, but I would have preferred to buy it yesterday. And what was the other one? Oh, Iluka. So I am assuming this one looks pretty good as well. Ooh, this one looks better. This one looks better because share price has been a downtrend for a long time. But again, you're going to have a bit of resistance moving forward. And I wouldn't be surprised to see the share price drop after this little bit of positive sentiment dies away. So that's Iluka and Lynas Rare Earths. A good day for both those companies, but is the market thinking a little bit too much? Coming in number 2 is John's Lyng Group. Share price up 22.33%. I was a shareholder and I got out today. I have my rules. When there is a takeover bid for a company I own, get out straight away. That's what I do. Get out straight away. So I sold not quite on open, but I sold within 5 minutes of open. Anyway, so why did I sell out? Because they have entered into a scheme information deed with PEP. So they're being bought out. A few ways to look at this. Uh, if you're a long-term shareholder, you might be a little bit annoyed. If you're a short-term shareholder, you're probably really happy. I would not be surprised if we saw a few. By the way, the takeover bid is at $4. So I don't understand why people buy in like at this. There's more risk on the downside than there is on the upside. Now, there could be a bidding war, but chances of bidding war, I don't know. But who knows? There could be. I think because the share price is very close to the takeover bid, I think the chances of the takeover bid getting through is quite high. But there's a chance it may fall through. And if that does happen, the share price will drop a fair bit. And there's a small chance there's a bidding war, but I wouldn't count on that. So I still don't understand why people buy. Yeah, I would sell. If anything, I would sell. Anyway, what am I going to talk about? Okay, so the way to look at this, I think there's two ways to look at this, is all depending on how long you've been a holder. Now, fortunately for me, I've been a long-term shareholder, so I bought in around, I think it was under $4. I can't remember. So I bought it in this uptrend back between 2019 and 2022. It was a beautiful uptrend, and then things went a little bit pear-shaped. Not as many natural disasters as what you would want for this company, and the share price dropped a fair bit. Share price dropped all the way down to $2. So there will be shareholders who bought since that big sell-off on the 25th of Feb, even shareholders who maybe bought on the big drop on the 27th of August. So last two times this company has released results, we've seen a massive sell-off and the share price has dropped a fair bit. But I would say there's been a fair few shareholders bought in because they found some value. And one of the reasons I didn't sell is because once the share price got low enough, I thought this company was dirt cheap. And that's where I think some people or some shareholders will be happy. Oh, nice little jump up in the share price today. But I do think there would be longer term shareholders who'd say, this is the bottom of the cycle. Management are just getting out at the bottom of the cycle. And there's a reason why there's this takeover bid, because there's a lot of value at these prices. Even at $4, it's probably too low. And I probably would be more in that cap. I think it could be significant upside moving forward for John's Lyng Group if they weren't bought out. So this is a great purchase from whoever's doing it PEP, because I do think there is some value at this level. So I think there's a lot of ways to look at this, and it all depends on why you bought in, your time frame, that sort of thing. And I'm probably leaning towards I don't like this takeover bid. I think it's an opportunistic takeover bid. It's undervalued at these levels, but that's just me. By the way, the reason the share price popped up on the 11th of June was because of rumors, I think. Share price up 17.7%. So if you go back to before that, the share price was 260. So the share price is up a fair bit from that, over 50% from before there were takeover rumors. Anyway, John Slinger coming number two. Stock of the day is Ora Banda, who did release production update. Share price down 9%. We haven't seen a little bit of a bounce. Financial year 25 results and financial year 26 guidance. So the market doesn't like it. And there's a reason why the market doesn't like it, because there's a bit of a disappointment here. For instance, they do mention how much gold they produced in June quarter. And then they mentioned impacted by the slower than expected ramp up of the mill and mining delays at Riverina underground. So I didn't know if this was positive or negative until I read that comment. I went, oh, this is negative because their results were impacted negatively. So straight away, I knew the share price was going to go down. But they are expecting a ramp up in production financial year 26. In fact, they have a nice little graph here somewhere. Here it is. Look at that. Produced ounces going up. Financial year 25 up to financial year 26. So a nice increase in gold production next year. I'm not sure what they expect after that. I don't follow this company all that closely. All-in sustaining costs seem high, 2,800, 2,900. That does seem a little bit high. I would like that to be a little bit lower, but if gold keeps on going up, should be good for the company. Anyway, so that's what's happened with Ora Banda. A negative update from the company, but possibility the market is overreacting a little bit here with ramp up in production in financial year 26. Let's have a look at the chart. How much has it dropped? Is this an opportunity? Oh, hello. Well, trend has turned negative. I don't think there's any debate about that. Share price has dropped a fair bit here. Dropped from $1.25 down to 65 cents. Share price was almost halved in a fairly short period of time. Uh, what did they release on the 6th of June? Did they release anything on the 6th of June? We're talking about 1 month ago. 6th of June. I don't think they released anything. They did. Financial year 25 guidance update. Oh, this is interesting. We can actually compare now. We can compare. Up production. I don't know. Where is it? Where is it? So based on the current performance and stockpile levels, financial year 25 production is expected to be 95,000 ounces. ASIC expected to be 2,600, which is, oh, okay. So this is why the share price started to decrease. So production was lower than guidance and all-in sustaining costs were higher than guidance. And they probably, I'm assuming they might have missed guidance. We're trying to see here. I can't see it. Oh, 92.4. 92.4, and they were expecting 95. Oh, geez. So only 1 month ago, they were expecting total production to be 95, and it was lower than that. The other thing I noticed here is all-in sustaining costs are expected to increase. Oh, so not a good month for Ora Banda mining. I can definitely see why the share price has just dropped like a rock. And definitely beautiful uptrend and sentiment in this company has turned negative. Definitely see why. So it's all based off news flow from the company. So chart does not look good. Now, in saying that, there is a nice little support level right there. So where the share price is, there is a nice support level there. So that's probably the only nice thing I can say about Ora Banda. Okay, so that's the stock of the day, Ora Banda. Now the chart of the day, inspired by Nick P2511, who asked thoughts on 3DA Amaero as a trade. Let's have a look. Just as a trade, no other thing I'm going to look at. 3DA. This one did pop on my radar recently. You'll see why if TradingView decides to not be silly. If I get rid of maybe some of these. Sometimes you just have to refresh TradingView. It's becoming more and more glitchy, I've noticed the last few months. Maybe it's just me, but okay, so Amaero popped on my radar because there was a downtrend in this chart, and the downtrend came to an end back in, well, the start of June, so 1 month ago. So a nice shift in sentiment, shift in trend, and over the past 7 or 8 trading days, share price has pulled back from 44 cents to 38 cents. Share price has possibly started to bounce off the 25-day moving average. We saw that happen back on the 26th of June. So that 25-day moving average might be a nice little support level for Amaero. So yeah, this has been a nice trade for about a month after it was in a short-term downtrend. So I don't mind this chart at all. It doesn't mean I would trade it. Many opportunities on the market, but yeah, go for it if you like it, I say. So we've had a nice little pullback. So that's all I can say about Amaero. The other thing I look at, of course, should be volume. And when you see a pullback, I do like to see decreasing volume. We've had that. So we haven't seen any sort of ramp up in volume. I probably would prefer some higher volume coming in since the share price started to break out. But I think there's been a subtle increase in volume. We can sort of confirm that with the weekly chart. Yeah, sort of, but it's not a bad looking chart for Amaero. And that is all I have for this video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.